G'day there. If you've ever used the justification, I can claim it on tax as a reason for buying something heading into the end of financial year, then this video is absolutely for you, because in this video, I'm going to take you through what it actually means to claim something on tax. G'day there, Phil McGilvray here, financial mentor, financial well-being consultant, and founder of the Money Boss movement, where we make financial education fun, practical, and easy to understand so that you and your family can thrive financially. And today we are looking at what it means to claim something on tax. Now, the reason I'm talking about this today is because over the weekend, I saw my very first end of financial year sale ad, and I know for sure that over the coming months, there is going to be literally millions and millions of money spent on things we don't really need simply because we can claim a tax deduction. So I'm going to go through with you now a very simple case study of what claiming a tax deduction actually looks like. Now, before we have a look at the case study, let me just take you through the number one misconception most people have in regards to claiming things on tax. And that is that for every $1 I spend on this item, this tax deductible item over here, I'm going to get a saving of $1 on my tax. In other words, I pay $1 less in tax. And this simply isn't how it works. So let me take you through a case study now. In fact, this is an example of a client that I've been working with who has just bought a brand new office chair for $495 because she thought, well, end of financial year is coming up and I need a new office chair. And so now is a good time to buy it because I'm going to be able to claim it on tax. So Mel has bought an office chair for $495. Let's have a look now at what this actually looks like in terms of her tax deduction. So on the left-hand side here, we have what happens if she doesn't buy the chair. So you can see she's got a taxable income of $90,000. She has no tax deductible expenses, so she hasn't bought the chair yet. So her taxable income is $90,000. Now, I have another video where I talk about how the tax brackets work, but Mel's, so we won't cover that in this video, but Mel's taxable income is going to be $17,787 on that $90,000, which means that her after-tax income is going to be $72,313. So that is the figure that she gets to take home after tax. Now let's look at what happens if Mel claims a tax deduction. Okay, so same taxable income, $90,000, but now she's got a $495 deduction because she's bought her new office chair. Her taxable income drops from $90,000 down to $89,000. So what's happened is she's taken off the cost of the chair and she gets taxed on what's left. So we can see here the tax is coming out at her income level, which now means that her taxable income is going to be $17,639. That means that she's just saved herself $148 on tax. Her after-tax income is now going to be $71,866. So this is what she gets to keep of her taxable income. So we can see, well, great, I've saved myself $148, but her income loss in terms of she's now, because she's bought a $495 chair, yes, she received $148 back on tax, but she's out of pocket $347. So she hasn't got back dollar for dollar every dollar she put into this new chair. Now, the important lesson out of this is that claiming it on tax gave Mel back 30 cents for every dollar she spent on her new chair, which is fantastic if Mel actually needed the new chair. Now, very often I have clients where their accountants have said to them, or the clients have complained to their accountant that I'm paying too much in tax, and their accountant has said to them, well, you need to go and spend some money, you need to go and buy a new ute, or you need to go buy some new equipment, and so on. And so they've gone out and done that, and yes, that has reduced their tax, but they're only getting back 30 cents, or if you're in a higher tax bracket, maybe 37 cents, or maybe 46 cents in every dollar you spend. You are not getting back that amount dollar for dollar, which means that if Mel didn't really need a new chair, she's just given away $495 to get $148 back, which doesn't make any financial sense at all. You should never buy something because it gives you a tax deduction. You should buy something because you need it, and the benefit of that is I can now claim a tax deduction. It's the same with investing. You should never invest because it's going to give you a tax deduction. You should invest in something because it's a good investment, and the tax deduction is just a bonus. So it's really important as we go through this end of financial year period that as you're buying things, whether it's a work-related expense that you can claim a deduction on, or whether you're a business and there are expenses that you can claim deductions on, just make sure that you actually need what you're buying, because if you're not, you're just wasting your money. I hope that makes sense. If this has been helpful, please click the like button and please subscribe, because every single week I'm releasing practical videos on money strategies and habits that will literally make $1 million difference to your future. So click the like, hit the subscribe, and I look forward to seeing you in the next video.